There we go. It's live.
Good afternoon.
Good afternoon. How you feeling?
Wagwan.
What's going on, Peter?
Wagwan.
No,
Good afternoon. How you doing?
Hey, what's going on, everybody?
Not too much, man. We got a good week, man. We got a big week coming up. We got earnings season starting this week, so let me just send a message out to the rest of the team to let them know that we are live. 1 second, and we're gonna get started. How was y'all weekend, man?
It was good, man. It was pretty straight.
Good.
Chilling. We're on vacation, so yeah, we're relaxing.
The Black Belt Summit was good, man.
Okay. Yeah, we had a pretty good weekend this weekend too, man. Yeah, we had a good weekend, man. Last night was the highlight though, but yesterday was the highlight, but we did have a good weekend. We are live. We are live. We typically give a 5-minute grace period before we kind of get into everything. So look, why am I typing tickets in here, man? I don't know why I'm thinking about tickets. I don't know what I'm thinking about tickets for. We are live and not tickets. Yeah, man. Wealth Summit was good yesterday. We had a good time. Met some cool people yesterday. And yeah, man. So we can just hop into things. Let me see. All right, cool. Let me see what time it is. All right, we got a few more minutes just to let everybody start pouring in. And then we're gonna get started. So we got we got a total of 8 Fed speakers this week. We got a total of 8 Federal Reserve speakers this week. So
oh man, it's gonna be a crazy week.
Yeah, it's gonna be a pretty interesting week, man. So I'm just trying to get through it. I mean, look, the more you'll see when I got the list of the important ones. I know we got Vice President Barr, he's speaking on Monday, but we also got Mester, and they added Bullard to the list too. So, having both of them on the same list is crazy. You see. All right. And then we got earnings season starting this week also. So it's gonna be a good week. I think we'll be good, man. But yeah, I'm gonna go ahead and start. All right. So by watching or reading this, you're saying that you understand the following. I'm not a financial advisor. This is not trading advice. This is solely for educational purposes. There are significant financial risks associated with options trading, and I'm not liable for your wins or losses in the market if you decide to act on this information. Let's get it, man. Come on. So, all right. So look, we're gonna just get started right now with the Fed. We're just in the economic data and Fed speakers for this week. So, like I said, we started off tomorrow with Barr speaking at 10 a.m. I'm not sure exactly what he's speaking about, but I'm pretty sure he's going to speak about the banks heading into earnings season. So we need to definitely be on watch, because when you got Vice President Barr speaking, now typically when he comes out, it's normally some hearing or something. I'm not sure if it's a hearing. I haven't found any additional information on what he'll be talking about. I will do some more research and post it in the chat. I'll probably post it in the brainstorming recap channel just to kind of so everybody can have that information. We got daily on Monday at 11 a.m. I'm not really too sure about this particular Fed member. So that means I'm not going to say that it may not be a volatile session or whatever with them speaking, but it's right after Barr. So we'll see. But it's just weird to me, man, because on Monday, we got Mester and she's speaking at 11 a.m. too. So maybe they're all at a conference or something together speaking. And but yeah, the reason Mester is so important, she's Loretta Mester. She's the Fed president of Cleveland. And she moves markets when she speaks. You know, she's one of the worst ones. So just gotta keep watch when she's speaking. So, you know, I know some of you are new to trading or just whether you're trading stocks or options, you should know when there are economic events or speakers, Federal Reserve speakers that can move the market, because that'll affect your investment. People ask all the time, like, why do I care about these people speaking? Because if they say one thing, the market could fall off a cliff or it could run like a bat out of hell, either or, right? So you got to just be on point with certain speakers. And now, since we've watched them a lot, so we know some of the Fed speakers that pretty much caused the market to cause issues in the market. Then we got on Tuesday, we got Bullard. I would say he's worse than Mester, man. I think she's a little cooler than Bullard. He's a little worse than her. And we got him at 9 a.m. on Tuesday. That's even worse, because if you're in a trade, like an options trade, for instance, the market doesn't open until 9:30. So anything that if you're in a trade and they say something crazy pre-market, you stuck with whatever happens, you have to deal with it when the market opens. So Kashkari, they kind of, you know, so we'll see what they have to say at 9:45 a.m. But again, it's a lot of FOMC members speaking. We had, and then also remember, we got CPI coming up on Wednesday, and we just had the ADP, the NFP jobs numbers that came out on Friday, and just like they did the last 4 or 5 sessions, releases, they've revised the numbers down again. So I don't know what to believe in terms of the employment data, that the numbers and stuff that comes out, man, because they keep revising the numbers. So you think it's one number, so they get the market to react a certain way, and then next week next month they revise those numbers down or up. So yeah, so we got these Fed speakers that are coming this week, and there are more, but these are the important ones that were the main ones that'll be speaking within the time that's important for us, right? So economic data this week, we got CPI, right? So this report is important because it measures the inflation in the market, and it's been going down. Inflation has been going down year over year, right? On a monthly basis, we've been seeing inflation go down. So does anyone know what the consensus is for this particular, or do we have the information for the consensus for this particular CPI print? Does anybody know? I can check. I'll check in a minute, but I'm gonna check now. As a matter of fact, I'll wait a second while you guys check that. So look, this is the thing, because lately we've been smashing the CPI report, man. It's been coming out, the numbers been going down. So it looked like the Fed is doing good, but it's not. Something's not balancing out, because the unemployment is going down. Well, this non-farm payroll data that came out Friday, we saw that unemployment was going down, and employment, you know, the payroll was going up. So yeah, so we just got to see how that works out, man, because the market reacts weird to certain data. Now, just for a lot of people that are here, just to kind of give you a little bit more data, what's good typically for the stock market is bad for the Federal Reserve, and what's bad for the Federal Reserve is technically bad for the stock market. So okay, you said this, the expectation is 306.3. So yeah, hold up, I had to look into that real quick. Yeah, because I was just checking into that. Yeah, because it should be a like a 2-digit number or something like that. It should be like a two-digit number. But look, so check this out. So what's typically good for the stock market? So like, if you see something that's saying, well, the economy is doing great, unemployment is going down, that looks good on the front end, but to the Federal Reserve, that means that they need to keep tightening. And you see what started happening to the banks because of this this tightening that they've been doing and just what's been happening to the economy in general. And so the Fed wants unemployment up to 4%. So if although inflation is going down year over year on a monthly basis, right? We're seeing that, and we're seeing in the food, inflation is going down. I think they said that energy, it was going down, and a few other key areas, inflation was going down based off of PCE data that we got last week or the week before. But if unemployment is still going down, and payroll is still going up, then the Feds, because again, we're trying to slow the economy down right now, and they just skipped last month, right? So the Fed skipped on raising rates last month, but they're talking about still getting 2 more rate hikes in by the end of the year. So we just got to see how this all plays out. But yeah, so just to say, so when you get news, so when you're trying to watch this news and figure out, well, damn, well, the inflation was lower than the expectation. Now that may make the market run in the short term for. Okay, cool. All right. Second. My bad. I'm just looking at the chat. Somebody posted for inflation. Cool. But yeah, you just so pretty much, right? What's going on? So when you see this information comes out, if anything regarding unemployment shows that is going up, that is going lower, the Fed wants it to go higher, right? And if anything about GDP doing good, so and just seeing anything regarding just the main things to look out for. Inflation should keep going down, and but right now they still want to see unemployment and things that nature going up because it's just different areas, different parts of inflation. So you see those things that look like it should be good, and it's bad. It's bad for the stock market. You see the market fall off a cliff most of the time, or in the short term anyway. Just know that's because they're anticipating the Fed doing more rate hikes, which means that there's a possibility that this soft or this minor recession that we're still supposed to have is still in place to happen. Now, consumer sentiment on Friday is another thing that we keep an eye on. That report comes out at 10 a.m. on Friday, and just gives us an idea of just how consumers feel about the state of the economy. And we also got jobless claims on Thursday, so that's going to show us the unemployment data. Now, one other. So after CPI, so CPI is the consumer pricing index, just measures inflation and what we buy and our prices, but PPI measures the producer pricing index, right? So the producers and stuff like that. So typically, if CPI is down low, then you can almost expect for PPI to follow suit, right? So it kind of gives us an insight on what could actually happen. I mean, sometimes we get a flat CPI and then PPI still is good though, and gives us a boost. So yeah, 1 sec. So this was the heat map for Friday. This is how we finished on Friday. Interesting over here, man. But yeah, but look, let me just tell y'all something. So, because the thing is, the market ran up at the end. You know, the market, like I was telling y'all, like the market will run up towards the end of the quarter anyhow. So market ran up. We had this was just the first week that we just ended of July of the market, and you see how we finished red, but we closed out the quarter. We closed out the quarter green. But like I was telling y'all before, a lot of times that happens because of how the hedge funds like to, they want to, if you're a client of my hedge fund or mutual fund, or with your 401k in someone's mutual fund or whatever, and we had a bad quarter possibly, right, or didn't have such a great quarter, at the end of that quarter, you know, that's when the numbers are reported after the quarter closes. So you run those numbers up you run the market up at the end of the quarter, so you can report a strong quarter, like how you finish, right? Even if the quarter was lackluster. So we can take advantage of that volatility towards the end of the quarter specifically, you know, so we call those quarter endings quad witching, right? So where they moving price around and moving money around, and all those positions are closing and they start a new position. So, but you see so last week we finished, a lot of these stocks needed to cool off anyway. A lot of stocks like Apple needed to cool off for sure. A lot of these stocks need to cool off. Now, Amazon finished green. You know, Amazon Prime Day is coming up. So that's a catalyst for Amazon. So we had that finish how it did. Meta finished red, but Meta's at a key level. Now we're going to talk about Meta more when we get to the chart, to the chart setups, because I got a few things to say about Meta. But look over here in the corner, right? We got the consumer staples or the defensive stocks. All of them are red right now. All of these are red because the market is still bullish. So they don't need defensive stocks right now. So that's the reason why all of these stocks are red. They pull out of defensive stocks, and a lot of times out of energy too, because energy is considered defensive, and they go back into big tech and they go and raid those small cap stocks that were left for dead. So think about it. When the market is in turmoil, you think about what stocks, look at it like a rough storm. If you have a storm and you in the ocean, and you're going to abandon the smaller boats. You're going to get those the larger ships, right? And you're going to abandon those smaller boats because they're not going to be able to weather the storm. And how you figure that out is their free cash flow and stuff like that. So, you know, so investors or just the hedge fund managers, the smart money that control the market, they are moving out of those smaller stocks that are likely to, you know, they're not going to be able to withstand the tough times, and they jump into the big tech and other stocks that pretty much can. And obviously they'll go over here to these stocks here, the defensive stocks. But when times are good again, or we get, because June, I forgot what day it was in June, but I think it was like around the second week of June was when we officially entered into a bull market. So we have all of these stocks. When you see consumer staples, man, and they start to turn red or whatever, they're backing out of them, and they back into these small cap stocks. They go raid the Russell 2000. So that's why we like to play IWM around this time. And so just keep that in mind. But it just was interesting that we had this whole sector over here red. And healthcare is defensive too, because that's another sector that you'll buy in any economy. But look, the whole energy sector was red, man. I'm sorry, green. Cool. All right. So this year to date, this is how we performing in the stock market. So we got the Dow up 1.8%. We got the S&P up 14.5%. Of course, the NASDAQ is up 30.5%. We got in the Russell 2000 up 5.8%. But look, so this is how far we are from our all-time highs. The Dow is 8.7% away from its all-time high. The S&P the same. The NASDAQ 15.7% and 24.1% for the Russell 2000 away from their all-time highs. Now, keep in mind, again, the Russell 2000 tracks the small cap stocks, and the ETF for that is IWM. So then we got NASDAQ, which mainly tracking the tech stocks, right? So, and we use QQQ to track that. And so for the S&P 500, we use SPY, and for the Dow Jones, which is the top 30 stocks on the New York Stock Exchange, we use DIA. So yeah. Now this is how the markets finished on Friday. This was how the market finished on Friday, with energy as the strongest sector, followed by materials, industrials, consumer discretionary, financials. The worst performing sector, actually, as we saw from the heat map, was consumer staples, healthcare, utilities, technology, real estate, and communication services. Now, this was the Friday before. So this was last Friday. This was the Friday before. So it's almost like it's inverted. If you look, well, not really, because we got tech still. We got energy that was still green, but in terms of every sector was green last Friday. But I'm saying it's almost like inverted in a way, to a degree. Not really, but you get what I'm saying. Now, in terms of options, this was the daily options call flow. This was the top call flow on Friday. I didn't check this on Friday before the close, but gold, a lot of flow went into gold calls on Friday, followed by Meta, Tesla, Baba and Rivian. Now we're going to talk about Baba and Rivian. I don't trade Baba, or well, I've traded Baba a few times. It's not something we trade often, but when we have traded it and later times, it has been great for us, right? But Rivian, we don't really trade Rivian. It has like a negative. Is Peter on here? Peter on here?
Yeah, I'm here.
That's Peter's stock, man. So we try to stay away from any
Chill.
stocks. But Rivian actually has a nice setup, man. And when certain people start asking me about Rivian, I'm like, oh man, let me go look and see what's going on with Rivian. When certain people start asking me about it, I'm like, man, it's starting to become meme-ish. So
it is. It's actually been gaining a lot of interest on Wall Street Bets Reddit page recently.
There you go. So look, but then on the flip side, man, we have Nvidia, Netflix, NXVX. I'm not sure ENVX. I don't know which stock that is. And we got Microsoft and ISML were the worst performing stocks. I'm sorry. Well, these were the stocks that were most shorted, heavily shorted on Friday's close on Friday, just Friday overall. And again, these were the top performing call options. These were put options. So you buy calls when you are betting on, the market going up, and puts when you're betting that the market is going down or certain stocks are going down. Now, this was the weekly performance, right? So overall, the top call flow went into Tesla for the week, followed by Microsoft, Meta, Amazon, and GDX. Then we had Apple, HLT, American Express, Disney, and Netflix. Now, so it's so crazy. We were talking about this the other day, right? And I think we were talking about it last night too, at the summit. But Netflix, man, so I'm glad they selling off Netflix. I'm glad they pulling Netflix back, because Netflix got earnings on the 19th. But we're gonna move on from this for right now. Now, all right. So where do y'all think we are right now? So the point of maximum financial risk. Now, where do you think we are? The point of maximum financial opportunity, and it's the risk. Now, where do you think we are on overall right now in the market? I ain't gonna change the slide until somebody say something.
Excitement.
Excitement? All right, cool.
Yeah, I would say excitement or thrill. I'd say closer to thrill, to be honest with you.
Thank you.
Who else feel that way out?
Thrill.
Thrill? Okay. All right. Mhm. Yeah, I mean, maybe. Yeah, could be. Yeah, it could be. Yeah, I say, all right, thrill may be good, man. Thrill may be cool, because I'm gonna show, we're gonna look at SPY in a second, man.
Is this chart in regards to for the year, or where the
Well, no,
market is currently?
it's just basically saying do you think, because when the market runs, people get into certain states, and market is a cycle. So just the market in general. So just where you think we could be in terms of how people are reacting in the market. Now, a cheat code, for some people, what you can do is you can look at the fear and greed index and see what the fear and greed index is saying right now. So if you go to Google and type in fear and greed index, see where is that? I think are we at extreme greed right now, or are we just at greed? And again, obviously that can happen. You're going to get a fear and greed reading. You're going to get that no matter what part of this we're in, you know what I mean? But I'm just saying, just look at that. I like to look at it sometimes just to.
It's a extreme greed.
Yep, still extreme greed.
Extreme greed, yeah. So I'm like, it's like this. And right now we had a strong end of quarter, you know what I'm saying? So when we're starting off this quarter a little iffy. So yeah, I see a few things that could possibly happen now. Like I said, we're going into earnings season this week, so it's a lot going on. But yeah, I like to just keep just to revert and just to kind of just to take a step back sometimes and just look at this and see where we could possibly be. And obviously this isn't a chart, you know, but just sometimes you got to think and just look and see what's going on. I just know I don't believe that some people think that I think a lot of people think that we're in relief or optimism. Some people think that, you know, but I'm not sure, honestly, you know, but these charts, I got a few chart setups though, and we can, when we get to SPY, we can unpack this a little further. I just wanted to see where your head was at. Cool. So yeah, I had to throw this in here, man. So we had our biggest month last month for June. So I didn't put this in last week's because I didn't have time to do this last week, but we had our biggest month in history I'll say that since we've been keeping track of stuff like this, right? And so just for June, so just pointing this out. So if you only grabbed one option per each trade that I called out last month, you would have made like $8,766, right? So I just think that was crazy. Man, we got people on here. I mean, I don't see him on here right now. Like, but shout out to, oh, he's not on here. But we got people in the group that be grabbing like 20 contracts at a time, man. I ain't counting nobody's money. I'm just saying. But yeah, so just that slide is in there, man. I ain't gonna go too deep into that, but just have to throw it in there. Recap, lessons learned, man. Let's talk. We had a interesting week last week, man. We had an interesting month, but any lessons learned last week or just anything that anybody want to share that happened in the market, you know, or anything, with any trades?
I can go first.
Okay, cool.
All right. So I learned for me, I'm Ivan. I learned to don't overanalyze, sticking to a few and being a master of three, and being a few of whatever we're looking at with the best of the go because we can master your own.
Hold on, say that again. Like it was hard to hear you. So I'm trying to.
Can you hear me now?
Yeah, I can hear you.
Yeah, I was saying, for me, my lesson was to don't overanalyze. I was looking too much at always like an indicator all mean different things, but it's just actually one sort of rule that you have for yourself and your discipline. You can, you know, pretty well doing difficult.
Okay, that makes sense. I mean, a lot of times we all do that sometimes. We overanalyze, you know, like we were talking about analysis paralysis, when you just got too many, you're looking at too much data or you got too many indicators. You're looking at, you know, just too many time frames at one time, all of these, you know, so it's good to be able to point that out and recognize when that's happening, because it can shake you out of some great trades. It can also, you know, it can shake you out of some great trades. It can make you jump into some trades prematurely or just make you see something that isn't there, you know, because if you're using a lot of indicators, now, some people can look at it like this. You're using a lot of indicators. So you get different levels of confluence, more indicators. But like, man, sometimes it's just looking at the chart, just take all of the noise off, because in real time, we talked about this too. The indicators can say a lot of things, but it's the state of the market too. You know, so it's just different things, man. And think about it like this also, if you use 1,000 indicators, you have to back test all of those indicators. I'm not using anything. If you ever see an indicator on my chart, I back tested that indicator. It's consistency, you know, and because if I'm a trusted indicator, and another thing that's important about indicators is, look at it like a case, or just something like if you have to write an essay or something like that, or you're trying to tell a story, you have to have supporting details to support, you know, to support or validate your thesis, right? Same thing in this. It's just, you're not just going to say, well, I got this one piece of evidence. You're going to have multiple supporting details that are comprised together to make this particular story come together, right? So the same thing with a trade. I look at it this way. I'm like, well, if I'm in a trade, I had to see so many levels, so many things, many multiple levels of confluence, and but it's never really just an indicator. And if I'm gonna use a moving average, I'm gonna keep that comment until we get to the charts, because I want to be able to show y'all when I show y'all that part, because I don't want to even, because that can be controversial if I say, because typically you would use moving averages together if you're just going to use moving averages, like where they cross up or cross down. But yeah, but no, that was a good one. That was a good one. Anybody else had any just a recap or lesson learned or just a thought?
Yeah. So I actually had something that I was looking at on Friday, right? And I posted it in chat actually. Like I think it was around like 11:59 or 12 o'clock on Friday. But I saw a setup on the hourly chart for the session hourly right before we hit that pretty big run, that midday run. We were trading in like a bear flag. And typically, you know, I would just be like, oh yeah, it's a bear flag, you know. If I get the candle close rejection on the top of the trend, I'll go ahead and maybe enter a position for puts, right?
Okay.
But this time it was different. I almost got caught up with it because I was like, wait, but this don't really seem right, because, you know, I did look at my indicators. I was like, the MACD went on this massive run down, and now it's getting kind of flat and it's coming back towards the signal, right? So in my eyes, I'm like, okay, well, in terms of the MACD, it's likely to run its course back towards the signal, which means that we actually have some room up instead of down, right? So, and then on top of that, I didn't even really notice, but on the previous session hourly candle, they fought like hell for that 9 EMA. Like they finished it a penny above where the 9 EMA was at.
You know, I want to see it, so I gotta go look at it because I know people
that was-
like, what is he talking about? I'm gonna go pull it up. I want to see it now too.
Yeah, that's the 11:30 session hourly candle.
Okay. Cool. We can get back on track, but this was too descriptive. I needed to see it, and I will use this. I'll use this side. One second. All right, let me turn some of these indicators off that I don't use on the session hour, but I'll keep VWAP and the 9 EMA on here. All right, so this was the 11. So you mean the 11:30 candle here?
Yep.
Okay, cool. All right.
But you know, the candles preceding that, I mean, they rejected off the 9 EMA
Yeah.
3 times.
Mm-hmm.
Right? But then we came up on that 4th time, came back, retested it, and they fought like hell to reclaim that 9. Like they closed it a penny above the 9 EMA.
Yeah.
So it's like, holy crap. And then I was like, okay, well, you know what I didn't do?
What you
Caught
did?
myself slipping. What I didn't do is I didn't look at the daily time frame.
Okay.
So I looked at the daily and I'm like, how do we close yesterday? Well, yesterday we had that nice bounce.
Hammer.
Or so Thursday we had that nice bounce off of like 437. I think that the low of that candle was 437.04. I had support around 437.44, so I was definitely off. But you know, we closed with that hammer candle, like you just said. So I'm like, okay, well that's a pretty bullish close from the day previous. So I'm like, okay, I don't really see this bear flag playing out. So I was you know, I was talking like I typically do in the chat, and I know some people were following, like a couple people or maybe a few people were following it. But you know, and look how crazy it ran. As soon as it broke out of that structure, it ran like crazy. You know what I mean?
It did. And I'm glad you brought that up, and you also brought up like looking at the other time frames too. And because I'm like this is what this is how I would look at this situation when this happened, because they fought like hell for this. So now look, so this is I'm glad you brought this up. So yeah, I would have glanced at the daily and see how high close, but you know, if right here it's at the 10:30 candle close at 11:30, okay, cool. So did you trade this? Did you trade this? Move it
So
off.
unfortunately, I wish I did, but I couldn't because of where I was. I was
Okay.
actually at work, and I was working next to this massive cell tower. So my
Yeah.
signal was kind of in and out. Like it was so bad that when I was gonna close my lock my work vehicle from a distance, I couldn't even lock my work vehicle.
Yeah, because
I
I
had to go
saw.
walk right next to it.
But yeah, no, I saw that Corleone had asked you about the SPX trade around that time, and I could see why. Like, is that trade that if that was an SPX trade on
I
this
wanted
candle or
an
that
experience.
candle? Oh my God, that would have been like I don't know how many thousands of dollars you probably would have
Mm-hmm.
made off that trade, because I did see that in the chat when he alerted that told you something about the SPX trade.
Yeah.
And because I saw you said that because that's how I saw when you said that you weren't trading, because I didn't see it in real time. I saw when you replied to that message that
Mm-hmm.
but yeah, I could see that would have been a massive SPX trade. Just this one right here, this one candle, and this candle was no wick really on either of these candles. But what I was gonna say was I would have glanced at the daily, but I would have been on the session hour, but I would have been looking for setups on the 5 minute. I would have been looking for setups on the 5 minutes or even the 15 at that point, because I wouldn't have been because like you said, they fought like hell and this candle finished as a hammer. You know what I mean? The day, unless I'm swinging, which I wouldn't know if I'm swinging at 10:30 or 11:30 a.m. yet. You know what I mean? I wouldn't that would have helped me take that trade. And I know that's the time frame that you typically would have traded anyhow, like a
Mm-hmm.
smaller time frame like that. But that's definitely what I would have done right here. I would have been checking out that 5 minutes. Soon as this candle closed right here, I would have been checking out that 5 minute time frame. And like you said, there's something about the bear flag not playing out. Oh yeah, they did a round trip. They just did a round trip on them real quick. You know what I mean? And then sold that market, violently sold it right back down. So smart money ran this up. And the way we know smart money ran this up is because we as retail traders don't have enough money to create these types of candles. We don't make candles like this. Only institutions and smart money can make these types of candles. So they ran it up and they sold it off. You know what I mean? But if you look, there's a range here. So there's a range here that it's been playing in. It's been playing in this channel. And so it was a lot of supply up in this area anyhow. So that's why we had that. Y'all hear the thunder? Crazy. Yeah, I just heard that. It's crazy. But so then we got a tweezer top right here, and then it just came right down the other side. So, but yeah, obviously hindsight 2020, we can sit here and be like experts and be like, oh, I would have did this, I would have done that. But no, definitely, I'm just saying this for like the people, like anybody we like to talk about price action and just analyzing this stuff. But yeah, like right here on that candle, 11:30 candle. Oh yeah, now I'm looking for an entry on the 5 minute, because I know I'm not holding this all day. I know that it's not gonna, around this time, we know that they rebalance in those books around that time, the afternoon is when they start to rebalance anyhow. So yeah, so that was a good one to point out, because and just so for everyone that's listening too, every chart tells a story. You heard he was describing this price action like it was a fight that was going on. We'd be like the 2-minute warning. They fighting for the end zone. They right there at the, in the red zone, and they trying to fight for this particular area right here. That's what happens when a candle is about to close. You got bulls and bears fighting for field position. So that's how we look at it a lot of times. So, we say every chart tells a story. It really does tell a story. But you got to be able to interpret what's actually happening. Now, sometimes on a situation like this, the reason I definitely go to a lower time frame too is because this candle closed so close. Like you heard what he said, like 1 cent over the 90 EMA. like how do you even measure that? You know what I'm saying? So so it closed so. It was such a tight close. But the good thing is, like he said, you got to look at what story it was telling, man. They was been rejecting. Every candle got rejected at this 9 EMA, and this one finally got the strength. and closed slightly above it, you know me, I'm waiting for a retest. So I'm always waiting for the retest. It came back down, retest VWAP. Oh yeah, I'm in that trade. You know what I mean? So, and so that was good. That was good. But you see what it did though, Kevin? It went right up, closed that bearish gap, and then
Yep.
died. So that would have been my price target. It went right up and closed that bearish gap right here and then died.
Yeah, and of course, you know, me being me, I never really have you know, astronomical price target. I can't even call it really astronomical because
Exactly.
it was expected, because I mean that's a major trend that that just failed
Yeah,
on a session hourly. That's a major trend.
right.
But you know, my first price target was 44111, which is
Okay.
why, like, you know, because obviously I wasn't trading it because I couldn't trade. But if I could at least help other people trade it, then that's cool. So I was like, all right, well, I would start at least taking some profits here at 44111. That was Wednesday's open, I believe, is what I was aiming for. But I would have some runners at least to some other price target, maybe like I think 441. I think I had 44192, which
Well, let
was
me ask you a question. So where are you finding these price targets on what time frame?
I was looking at the daily.
Okay. All right. So yeah,
Yeah.
so on this, so I guess we could do that. You can do that. You can do that. You can do that too. Yeah. I mean, so just me personally, on a trade like this, I'm looking at where those price targets are on the daily. Like, you know, I'm just trying to, so I can visualize where those price targets are that you're looking for, because like because like on this candle on Thursday, the reason I'm saying this is on this candle on Thursday, once this candle closed up here, it ate all of those old price targets. You know what I mean? I don't see
Mhm.
those, you know, I don't see those other, I get what you're saying, that open right here. So you're looking for a gap fill, like to close this gap here, pretty much. Is that the gap
Yeah.
right here? I'm just
Yeah.
trying to, you know,
Actually, that was my second price target. My first one was just at the bottom of that candle on 630.
let me see, hold on, I'm trying to make sure, because, you know, I want to make sure I understand. Right here?
Yes,
Oh,
630. Let me see. That's the daily, right?
oh yeah, my bad. 30th right here, my bad.
Yeah,
You mean
630.
630, you did say that.
Yeah. I
Yeah.
was aiming for that at first, but
Gotcha. See, but no, and I'm just pointing this out, right? So yeah, so that would okay. So all right, got you. So but still like you pretty much you were looking like for it. So that's not the gap fill, just the wick here, right here.
yeah, that wick right there.
Gotcha. All right.
And I know one of the hourly candles closed near there, but then it just like it opened up right at there and then just ran.
Yeah, but just to let you know though, so just to let you know, so like I wouldn't use that as a target. You know, it may hit sometimes, but like you gotta think about like when I'm watching a price move, I'm like, what are they trying to do? What are they looking for? And I'm like, they want this gap fill, and that's where it went. You know what I mean? They're always looking for to fill the gap. If the gap fill is there, that's an obscure. This would be considered like an obscure target here. Like, you know, like. You know what I mean? It would be an obscure target. So you gotta go for it. Like, man, they want this gap fill. And now if you want to find a closer target, what I suggest doing is going down to the 4 hour then, instead of finding something like that, because that's not like a viable target. You know what I mean? I want to find a target that's an actual target that's, you know what I mean? That if I want to find a closer target, because I get the concept of wanting to, like, you know, I don't want to,
The fuck?
if I'm,
I don't know why you getting all the way over here. We're getting ready to get off.
hold up,
I mean,
who's
it's
that?
traffic.
Who was
Somebody had to, hold up. I just need to mute those lines. Just threw me off. But yeah, so no, all I'm saying is, right, so I'm looking, so that's why I was asking, before we even knew where price targets we were looking for and everything, the first thing I said was, as soon as it closed above that level, I would have been looking on the 5-minute chart. You know what I'm saying? So even me, I'm looking on the 5-minute chart for a target, because I'm looking for a setup now on the 5-minute chart, because just because it closed above that level, I'm like, if I don't have a setup, I'm not trading. Now on the session hour, I would have traded it off a retest, and that's what it gave us. But now I'm just looking for a possible target on the 4 hour. And so, and even on the 4 hour, we got the gap fill. That was the area of interest. You know what I'm saying? So, and a closer one would have been, so yeah, I'm just saying like, just for continuity purposes, you know what I mean? Just so you could, just to have, because I know typically you like to trade the lower, the lower time frames, because you're looking to get in and out of a trade anyway, which is an effective strategy, on the trade like this. That's the first place I would have been looking for, though, just for it to fill that gap, because it looked like that once it broke through and we finally got that breakthrough, that was the only target that I saw in sight on there, outside of, let's see, to go to the 5 minute. And I know you traded 30 minute too. You got me looking at that time frame too, so I'll check that one too. But here, if we look at that time where that, where is it right here? All right, cool. This was the candle close right here. This is daily again. Or I'm on an hour, and I'm on an hour, my bad. So here we got this candle close here. So now, and that was what time? Yeah, the 10:30 candle that closed at 11. That was 11. Yeah, the 10:30 candle that closed at 11:30. Second, just trying to get over here. So yeah, so then I would have been trading off the 90 EMA now, because what I'm looking at is off the 5, I would have been looking at a lower time frame. And as long as price held above there, then, because you can see the same setup here, like you were talking about the bear flag, and it reversed and everything. So you can even find a smaller setup here too. Like if I'm looking for a flag, I'm always looking for one of them, and I see a few of them in here. But especially if I go over here, so I know, let me just do that to be even more precise, right? So now we got that close. So, excuse me, I'm looking for a flag. Give me some sort of flag, man, that I can trade. And if I'm looking for a flag, 1 second, sorry. I'm like, all right, give me something that's going to make sense, right? And that's what I'm looking for. I'm looking for a flag. And now, obviously, if that candle closed at 11:30, it would have been like over here somewhere, right? So, and we still got congregation above the 90 EMA here, and we got a flag here, or a wedge. Let's call it a wedge, right? So we got a wedge. We got a candle confirmation above this wedge right here. This was the first one that we really got, that we got a real close above the wedge, because I want y'all to pay attention to this. It's small, but I'm gonna make it a little larger. The reason we're looking for an entry on a lower time frame is because I'm not planning on swinging this trade. So my entry isn't, I'm not necessarily looking, I want something solid that I'm gonna really be able to, that I'm gonna be able to, in my mind, hold on to while I'm trading. So we found a nice setup on a larger time frame, which is the intraday 1 hour, which is typically the highest time frame I use intraday. Now you can use the 4 hour also, but if I'm trading this, and you see how the wedge, we got it here. So we got, it's funny how I just got it on, so it shows up on both charts, so you can see here. This was the candle that closed above the 9 here, right here. So, and thanks for bringing this up too, Kevin, because this is type of stuff we need to talk about. And,
yeah, no problem.
Yeah, and so here, so now I'm like, okay, cool. We got that 11:30 candle close, and price just, we barely close above the 9 EMA, and it's crazy because this price action kind of shows that same thing. So now we got that close, and now it's getting a little choppy here, right? So we got technically we got another little flag here that I could have just drawn, but I wanted to just give you a larger depiction of it, but I could have drawn a smaller flag here. But look, so we got this price action. So some people just look at this stuff and be like, well, man, it just broke above here. It just did this. It just did that. I'm waiting for a solid candle confirmation. So we got that candle confirmation here. As soon as we get this candle confirmation on this next candle, man, it come down. I'm buying that trade. And it ran like a bat out of hell from there. You get a few retests and it keeps going out. People say, well, when would you sell this trade? The moment it loses the 9 EMA on a 5 minute, then I'm gone. Because look, this is the thing. The moment we got that candle confirmation right here, it ran. Look how many dollars. Well, like I'm not dollars, but look how long this trade ran. And I know Kevin, he likes to trade SPX, which is a deadly thing to do, man. It's so the volatility, the IV and Vega exposure on that trade, man. It's just so it's overwhelming, man. It's overwhelming. And your contract could get clapped quick, but this would have been a perfect trade for it because, and that's what I'm saying, like, how would you know? Because the 5-minute chart, the good thing about the 5-minute chart, it's only going to give us 5 minutes worth of price action, right? So like we were talking about, how do you know what time frame to use? I'm like, it's based on how long you're planning on staying in the trade. And if I'm going on a trip to the beach on Friday and it's Monday, I'm not going to use the 5-minute chart. It's a 5-minute weather chart. I hear thunder again. But if I'm going to look at the daily and possibly the weekly to get a better understanding of how the weather could be on Friday. So look at that, use that same concept when you're trading. So we found the setup, well, Kevin found the setup on a higher time frame. And this was and like I said, this takes crazy analytics to be able to just to agonize over this particular candle right here and where it closed. This blue line is the 9 EMA on the session hour. And so now we got action. We got this bounce, move. And a lot of people always want to know, like I said, when am I going to take profit? The moment we got a candle confirmation close below here, because some people will play games with this and be like, well, all right, well, we got one candle close, but it bounced right here. Now we got one up here. I'm like, look, y'all playing games, man. We got this move. It broke out. This was what gave us the entry to get into the trade. And we use this as our confirmation. We got that candle confirmation, that solidification right here. It gave us what we needed. And then the moment we lost the 9 EMA, you still wait for this candle to close. It closed right here. I'm done. But look, so this what happened. Next candle went up here. A 5-minute chart is very volatile, man. And it's the lower the time frame, the higher the emotions, right? So you got another candle close, and now you got, because they're still fighting, trying to hold on to this, but then it flushed, it died. Then look, if you ain't take this trade, the put trade on the downside, this was the best entry right here. We got a retest right here. It came up here, retest, it flushed, you know what I mean? And it died, came down. It's easier. So it looks easier to trade this than trading this. Now, me personally, I'm gonna use the 5-minute, but we also entered on this trade, but we got time frame continuity because the same thing that's happening over here, we got over here. But what I'll say is this is just the 3 large candles, but sometimes you want to do surgery on the candle to see exactly what's going on inside of it. And that's what we did over here by using that 5-minute chart, because, you get, that thunder is crazy right now.
Hasn't hit here yet.
Yeah, so that's good, man. And again, Kevin, he's a 5-minute. He liked to trade those 5-minute charts, but no, that was good. I'm glad you brought that up because I thought that was a good example of like, just let's go in and look at those targets. But yeah, but like you were just saying, but let's go back to that though for a second, 2 targets. But yeah, like every chart tells a story. And so I'm looking to see like, what is the best target, not the one that I want, you know what I mean? Because I may just want to get into a trade or get out of a trade quickly, or, for whatever reason, because I used to do this all the time and I still do it, but I always cross-reference myself, right? And with other time frames, but I'm like, what is the likely target here? And just if you backtest SPY, you know what I mean? I like to backtest SPY a lot too. And that's how if I can't figure out where the target is on some of these trades, and I'm like, you know what, I'm not even taking that trade because I don't know where I'm gonna get out. I don't know where the target, it doesn't have a setup for me. It's just like we talk about going into the bank. You go into the bank, you say, I know they got millions of dollars in this bank. We going in here, but like, how are we going to get out of there? So then why are you going to go in there if you don't know how you're going to get out? You don't have you got to have the whole plan set up for this trade, man. You can't. Yeah. So that's the thing. And so I'm glad you brought that up. That was a good example, man. I'm glad that was good, man. Thanks, bro.
I appreciate you too, because I struggle with I struggle with staying in trades, or knowing when to stay in trades. So that helped me out. Your explanation helped me.
No problem. But I want to tell y'all something. One of Kevin's strengths, we talk about this all the time though, is my biggest problem, like my biggest issue as a trader is taking profit. It's been that way for years. I've gotten obviously a lot better over the years, but I still struggle with taking profit sometimes. So what I do is I'll set limit orders. So when they get to certain levels, if I have, depending on how many contracts I have, if it's a breakout trade, a bull flag breakout or something like that, I'm having the the algos automatically sell my trade for me, not taking responsibility of managing my emotions in that situation. I'm like, I know I want this trade to keep running, and I know that's one of my weaknesses. So let me set a limit order. When it reaches this price, it's going to automatically sell it. Just like you have stop losses. If you get below a certain price, you have it auto sell. So I do that. But then sometimes I'm like, man, this is my first price target and this is my second price target. And I'll have traders ask me, well, it's pulling back a little bit. Should we get out this trade? I'm like, did it reach your price target yet? If it didn't reach your price target and it's still holding market structure and you still have a lot of time on that contract, obviously, if we're talking about this, let's just say time is not an option. Let's just consider time not an option in this particular instance. Then we would do that. But I was trying my best not to switch over to charts yet because we had a lot of other stuff to cover, but I had to. But I'm going to get back over and then we're going to come back to the chart setups in a second because we got some good trades for this week because it's earnings season, man, starting. So. Yeah, but that was a great one. That's what we needed right there, Kevin.
Yeah, no problem, bro.
I needed, bro. Always looking for something like that. But yeah, so I mean, any other lessons learned or recaps or anything now? I know we got a lot of guests on here today, but for traders that are a part of our Discord or our community, I'm asking y'all too, because what's tomorrow? Tomorrow is Monday. Yeah, tomorrow's Monday. And so this is a chance for you to ask questions. Now a meta trade was called out on Friday. You know what I'm saying? I'm gonna get to meta in a minute, so I'm just saying, this is an opportunity where we schedule these meetings for an hour, but sometimes these meetings they go longer because of the different things we need to discuss. So this is an opportunity to kind of to get the things out that you need that you want or things that you've gone through that you didn't understand and you need help with, because when we don't get questions or comments during this section, what I assume is, because look, we got certain rules that we follow too, right? Okay, well, we know if you don't know how to read price action, take profit at 30% or ask a question, only enter trades after the candle confirmation, and we just different things that you have and different rules that we know that we follow all the time. So I could be on the tennis court and I don't have to worry about my team knowing to cut this trade if all of a sudden a trade that was up 40 or 50 or even 100% all of a sudden goes down. I don't have to drop the racket and go to my phone to make sure I go tell the team to get out of that trade because they know, right? So, but then there are some instances where I'll get messages or my admins will get messages where somebody didn't know anything. And this is the opportunity for us to unpack those things so that way everybody can be on the same page and we could do that. So when we don't get those questions, I assume, and I like that. If we don't get them, then I'm like, okay, cool. We got this. The team is just getting more and more solid. So that's good. And no Zoom on Mondays either. So yeah, yeah. But I
had a quick question.
Hey, what's up?
Yeah. So question. So how do you go about choosing the right time frame for analysis, for higher time frame analysis?
Hold on, it's really soon as you spoke the first word, your phone you just kind of went underwater.
All right, can you hear me now? Testing.
Yeah, I can hear you.
How do you go about choosing the right time frame for higher time frame analysis? Day trading versus swing trading?
Yeah, so I honestly, I simplify it like this. I look at the chart like I said, if I'm going on a vacation or something, I'm like, well, if I'm going on if I'm going to the beach on my lunch break and it's noon, it's 9 a.m. and I know at 1 p.m. today or at noon I'm going to the beach. Am I going to use the daily chart or the weekly chart to see if it's going to rain by noon, or should I probably look at the hourly or the 30-minute or even a lower time frame like that, maybe even a 4-hour chart to see if it's going to rain by noon? You know what I'm saying? So that's how I decide what time frame we use. So basically it's literally based on how long you're planning to stay in that trade. So, or if I'm going on I'm going on a run or a hike or something like that. How much water am I going to take? How long is your trip? You know, so it's the same thing with the charts. You don't want to overcomplicate it, because what we do is, because the charts are confusing and they are intimidating. So, but that's why I always simplify it like this, based on how long are you planning on being in the trade. So, but but honestly, Isaac, the way to answer that question is based off of figuring out a lot of things. So number one, if you're intraday trading, let's just simplify it like that. We know if we're intraday trading, we're planning to sell that. We're intraday trading, and we're not, let's say we're not swinging. We're not going to swing those trades overnight or nothing like that. And a time of day is important too. So if you're trading the open, let's just say that, because when I'm trading the open, the market opens at 9:30 a.m. It's probably the best time to trade too. And so the market opens at 9:30 a.m. My goal, if I call out a trade to my team within the first 5 to 15 minutes of the market, my ultimate goal is to get out of that trade by 10 a.m. So if that's the case, then I know I love to use the session hour candle, and I'll go back just because. I'm gonna go back just because I should. I think I should. And so I'm gonna go back. And so I know I love to use the session hour candle, but we haven't had an hour worth of price action yet. So I may use the session hour candle as a reference point, because I'm gonna use another chart. I don't want to use SPY right now. I'm gonna use Tesla. Yeah, let's use Tesla as an example real quick, because the SPY chart, man, my Tesla chart is terrible. I got lines everywhere on this chart. When you wear a chart out so much, man. But yeah, so here's the session hour on and actually I'm gonna take that down. Hold on. So let's just say, all right, we'll use this range here. So let's just say this is my session hour on Tesla, and this is my 5-minute chart. Now at market open, I'm using a 5-minute because I'm looking at it like this. Well, man, we don't have an hour worth of price action, so I can't just use the hour as my only reference point. I mean, it can be a reference point, but I'm not using it to enter or exit this trade. And that's because there's not enough data at market open. This can give me indication on what happened the last hour, which was yesterday, you know, or the week before, right? If it's a Friday, but if it's a Monday, but at market open, I don't have that much data. Now, some people may use lower time frames. I don't recommend using anything lower than the 5 minutes. Some people use 3 minute, 1 minute. I just think the lower the time frame, the higher the emotions. And I don't touch those time frames unless I need to touch a 3 minute, but 5 minute is fine. And what I'm looking for on the 5-minute chart, I only use 2 indicators. Well, I guess we can use more, but I use, when I say indicators, I mean the ones that's physically on my chart, on the chart, not VWAP, because I like VWAP too, but I'm using MACD, sorry, I'm using the 9 EMA, and I'm using VWAP. And these two, I like to use them. And so if a market open, I'm waiting for, so it's 5 minutes worth of price action. If the market opens at 9 o'clock, that means by 9:05, I have 5 minutes worth of price action, and so on. So that's going to give me quick bites of data, price action, what's going on in the market, whether the bulls or bears are in control, and where price is likely to go in the next 5 minutes, or if a setup is forming. So like right here, hold on, where we are, here's and since I like trading flags, I'm always looking for one. You know, you trade things and you look for it right now. Obviously, I could find multiple, and I was telling someone before, someone asked me, well, how do you draw the flags? How do you know where to put the lines? I'm like, man, to be honest, a kid can do it. Because if I had trend lines on this chart, it would have, like, matter of fact, let me see if I can show you that on if TradingView has that. But there is this other application that has trend lines. If you turn trend lines on, man, it's going to have like lines like intersecting everywhere. So meaning you can see lines anywhere you want it, but it's all about what's really going on, what story the chart is actually telling you, right? So I'm always looking to see, my bad, I got these, this magnet thing on here. So it automatically snaps it in different places. So And it's being away. I don't need this second line. And the reason I don't need it is because I got a 9 EMA right there that's showing me where price is bouncing. And that's the trend line. So I don't need anything at the bottom here. So I'm just looking for price to break out of here. And it did. It's still holding this 9 EMA pretty much. So but yeah, this is obviously not market open. It's probably over here because we see a gap up. So from yeah, I'll just be accurate with this, so we can play this the right way. So look, so this was market open. This was where it closed at on Friday, and sorry, on Thursday. And then when it gapped up on Friday, this is the first candle, it gapped up right above the 9 EMA immediately. And it's holding the 9 EMA. So VWAP, it didn't really, it got up there for a second. It didn't hold up there. And then it lost the 9 EMA, came back down. So the price action is bad already. So if you wanted to trade puts off of this, you know, what I'm looking at is to see what's going on over here though. So let's look at Friday. Because like I said, we use the 9 EMA. I mean, so we use the hourly as a reference point, right? But we're using the 5 minute for an entry. So look, so here we go, right at market open. The candle opened here. It ran all the way up here and then died. But that candle solidified below this 9 EMA. But this price action is just, it's a lot of volatility that happened on Friday. And that was because of the non-farm payroll data numbers. So we got to also, that's why telling people you can have the perfect setup in the world, but if certain economic data comes out, it can change everything. And then we had, I think it was the home sales data number or something that came out on Friday at 10 a.m. So all of that stuff happened within this candle here. But initially, market still gapped up a little. And it just was this was some choppy price action to me. Honestly, let me see, I'm looking to get in or get out of a trade by 10 a.m. I wouldn't have found an entry for a trade here. I wouldn't have traded nothing. So because it was just too choppy. It was nothing for me to trade here. And now it's already 10 a.m. But look, at 10 a.m., I get something to trade because look, we rejected VWAP and then we lost the 9 EMA, candle closed below the 9 EMA. But I'm like, you know what? Just let this play. So like, and again, this is a nice quick trade, you know, by 10 a.m., by 10:30, sorry, end of power hour, you're out of this trade and you made a nice move, a nice $3, what is that, $3 move from this candle confirmation here? Because of course I'm gonna wait for this candle to close. That's 278 4 all the way down to 274.20. So about a $4 move almost on Tesla, and that's Tesla. So that would have been a crazy move right there. But Tesla is so volatile. Soon as power hour ended, price went the right way. Because look, so we call this power hour because market open. It's just like when a store opens when the store opens or right when it's about to close, you get a surge of customers coming in at the beginning and at the end. So you got the most market participants in here buying and selling at this time. And so this is where you got the highest chance of having the stock move the way you want it to move, or just getting a lot of volume on a move. So yeah. But so like you were saying, so how do I know what time frame? I'm like, I know I'm not using any. What other time frame could I use here? You know, I can reference the hourly, or I could reference the 15, because I know like KD, he on here. Shout out to KD. He used the 15-minute chart sometimes, and I use the 15 too. You know, I just don't I keep it on one of my other charts, but that's another good time frame you can use once we're getting close to 15 minutes of price action, or after we get 15 minutes of price action, you get 4 15-minute candles in a session hour. So, you know, I can look at that time frame too. But I'm just trying to give you an understanding of when to use certain time frames, because again, it depends on what you're trying to see. Because like in reality, if I'm looking through a crowd and I can't see because it's too many people, I'm most of the time I'm going to go up on go on a hill or something, stand up higher so I can get a better look, right? And so that's what I would do in a situation where it's not clear. Even when I'm looking for a setup on a chart, it may be a 5 minute or an hour or anything may be a little noisy. So I can go to, and it's just something, this isn't for a trade. I'm just saying, just looking at a chart, if it's just noisy, go to a higher time frame, and it clears up the picture sometimes because it's not as noisy. What just happened? There we go. So look, this is all of that price action that happened on Friday in one candle right here. You know, so it's not as noisy, but what we do see is Tesla is Tesla look like it wants to come back down here to this 90. It may look like it wasn't inside on Friday. It actually finished 2 up, but it wasn't enforced. And but it looked like it's starting to fill this gap down here that it made for that delivery numbers. It may come back down here and close this gap or just bounce off this 90 MA before earnings and then take off because they got earnings the week of the 19th also. But yeah, so I know that was a long explanation, but it's not a short answer to that. It is a short answer, but I just wanted to kind of give another example because just it all depends on the time that you're planning on holding the trade. And that's all that should be based off of. And again, it's not going to be easy. And what's up, Roman? I see you had your line unmuted.
I was gonna see if you could go over the window dressing. So is that like before the quarter earnings when they put their earnings and they try to run it up so that their numbers look good?
Yeah, so I did. Yeah, so I touched on that a little while ago. But you mean when just when the hedge funds and stuff like you just said that. You said window dressing. Yeah, so pretty much like around quad witching, we always watching the market around the week of quad witching, right? And just at the end of the quarter. And like, I watch Meta a lot. So I always tell y'all, man, during that Friday or just that week of quad witching, Meta normally runs like a bat out of hell during quad witching. And so we see what they be doing. A lot of times Meta it was a few times. Now, if it's performing very well and they need to, and the whole market is coming down, obviously you're gonna get give or take. Things aren't always gonna align this way, but you gotta look at the probabilities. So me, I'm like this. If the stocks are gonna do what the overall market is doing for the most part. If one car get wet, all of them get wet. So you can't just focus on the individual car in that regard. But yeah, in this situation, yeah, it's like if that's how they get paid. If I'm paying you to manage my money and so I can retire, with a nest egg or something, then most of the time when they send out those reports or look at those reports, those are based off of quarterly. They're quarterly reports. So if a stock, and it's just something that's known, right? That I've seen throughout the years too. But it's like let's say your portfolio was flat or it was down for the whole quarter. Heading into the close of that quarter, they run those stocks up, and it's the hedge funds. It's the hedge funds, the institutions running those stocks up into the close of the quarter, and then they start. And if you look at it, if we're in a bear market and that happens, normally right after the bear market, after that quarter closed, then the stocks come right back down, and then they'll run them back up at the end of the quarter again. Now sometimes that quarter close correlates with a crazy economic report or something. So there's no way that they can fix that. They can't do anything about that. If the whole market came down because the Fed said we're going to continue to raise interest rates, or just something really bad happened with GDP, or you know what I'm saying? We got different things that could happen in the market, or another bank run started. There are things that like that can happen that will stop this from happening. But if you just heading into the end of a quarter, just watch how the market moves, and try to run them up. Yeah, so that was a good one. Cool. I'm gonna move on because I think we got some good stuff, man. So guess we have no. Did anybody else have any questions though? Because let's keep going. But yeah, all right. So what's up with SPY, man? What's going on with SPY? Now this is a SPY weekly chart. I told y'all SPY is the ETF that tracks the S&P 500. And this contains its top 500 stocks in the New York Stock Exchange. We use this as a reference point because if SPY contains the top 500 stocks in the New York Stock Exchange, we can pretty much say this is it tracks the whole market, right? Now, this is where we close. This is a weekly chart. So each candle represents 1 week of price action. And it's been trading this 90 in May for a while. We broke up above this range here. and we finished inside. Now, is that an inside candle on a week? Yes, it is. I love inside weeks because insides are neutralizing candles, right? So we don't know whether it's going to go higher or go lower, but it's a neutralizing candle. So, but it's going to, either way, it's got to choose a direction. And a one, when you get a one, that means it's inside. So a candle that's a 2 is a directional candle. That means it shows a direction. This candle is a 2 because it took out the high of the previous candle. So this candle went up. It could have went down. And it still would have been a 2 as long as it chose a direction. Now, if it took out both sides, like ate the full candle like this one, it would be considered a 3. This candle right here, right? So a 3 is an engulfing. Well, technically, it doesn't have to be an engulfing candle. This one is an engulfing candle because the body of the candle ate the full body of the previous candle. So, but yeah, it's a 3. But a 1 candle is a neutralizing candle because it doesn't. The next candle, unless it's a double inside week, it's going to choose a direction. So it's either going to go up or it's going to go down. Now, I'm not going to elaborate too much on the numbers and stuff like that because yes, 1 second. And yeah, so I have a lot of information on that, I got 2 channels in the Discord that has them. And again, we have y'all can join the Discord for free. I'm gonna post a link in this chat on here so y'all can just hop in the Discord. It's a lot of learning materials in there, and you can ask questions. A lot of the charts that I'm gonna go over and a lot of the trades that I'm gonna go over in a minute for this upcoming week, some good setups, they're gonna all be posted in the chat, and y'all will have access to those as well. So I'm going to post a link quickly so y'all can have access to that. Yeah, because it's be good. Hold on 1 second. Just looking for a link. Copy. Hidden copy button. All right, gotcha. 1 second. Here we go. There we go. Cool. But yeah, so SPY, what I was going to say, so look, so SPY has been rejecting this area right here. It's a small gap fill area here, but if we need to break through this price action, we need to break through this level here for a continuation, right? So it's a little neutralized right here. Now, we don't know what's going to happen. Nobody knows what's going to happen. Now, what's going to determine what's going to happen? People are like, well, what is the catalyst that's going to do this? It's earnings season starting. So we got all of the banks. Well, some of the big banks start reporting this week. We got JP Morgan, we got BlackRock, we got Wells Fargo reporting, we got Citibank reporting, all reporting on Friday, right? So they're going to set the tone. And now if JP Morgan beat earnings, then Goldman Sachs is going to run like a bat out of hell, right? And we need that. We also going to get Bank of America moving. We're going to get a lot of these other banks that are going to move. So I got a whole setup for us for earnings season, man. Got a whole setup. That's a lot of stuff to keep up with, but that's going to be, they set the tone. They're going to set the tone for where this market is going and where it's headed. So, but is that going to break? But if they miss earnings and guide down for the second half, because they keep in mind, now I know there are certain companies that historically guides down for the second half of the year. And so we're going to see, again, I'm not sure about JP Morgan being one of them companies, but look, now, but this is the thing, every time we went up here to this range, it's gotten rejected. Now, the last few times it's been up here, it's gotten rejected. Let's go back. I'm not sure. What was this? This was back in May or April. This was April or May when it went up here, got rejected here. Went back up there again, tried again, got rejected, violently sold off. And now we're up here again and it's getting rejected. So it's going to be hard for price to break through this area here. And it has been, but the banks can do it. If the banks have a big earnings and good guidance, because that's most important. They can have a good earnings, but if they see some headwinds that could cause, because the banks, they have a lot of vision into further into the economy, right? To let us know what's to come for the rest of the year, second half. So we'll see how that goes. But yeah, so that's what we have this week. So SPY is sitting right here with a neutral candle, and we're just waiting on the banks to see what happens now. So let me move on from here. All right, chart setup. So I got a few, man. I got a few on my list, man. A few solid ones on my list for this week. And I'm going to start with, we're going to get off at Delta. While I'm here, I'm just going to go ahead and hit Delta, man, since I already got it on my chart, on my screen already. So Delta got earnings on Thursday, and you see it's already run like crazy. Now, this is the daily chart, but it's already overrun, but it's already extended like hell. You see how it broke out of this wedge that has been in for a while. It consolidated and broke out again. Now it's consolidating again. Now, it's on the daily, it look extended as hell, right? But when you go to the weekly, it changes everything. The weekly look like it's strong, and it look like it wants to try to get up here to this gap fill area. It looks like it wants to get up here. It looked like it wants a $10 move. Now, this could happen in so many ways. Look, now we got MACD confluence on the weekly. We got the MACD line across the signal line. We got four strong oscillator bars right here, right? Oscillator bars. And we had some substantial volume. And we even were able to hold, we were able to maintain its green status on the week on Friday with that market stress test. So for them to be holding it up like this, they must see a beat. Now, I'm going to tell you another thing heading into this time of year. Traffic does pick up on the airlines, right? So we'll see what they have to say. Now, the CEO was on CNBC last week, and he had a lot of good things to say about Delta. But I wonder, has the move been priced in? So they come out with all of this good data. The CEO was all happy, and excuse me. So the stock breaks out and it runs, right? And this is a weekly chart. It's been running for a few weeks, as you see. It consolidated a little bit and then it ran. So now it's consolidating again. It ran, but it pulled back a little bit. So, but this is a weekly chart, man. It broke out of this bull flag and now it's trying to move. So I think it wants this area up here. At least going to try to retest the start of this gap fill area. It looked like that's what it wants to do. But I'm like, where could it pull back to first before continuation? Is there anywhere that it could possibly pull back to? Now, I have my 200 moving average on here. I have it on here for a reason, for some other charts we're going to get to, but I'm going to change it for a second. I'm going to change it to my 9 for a second because I need to see something. Change this to 9. I want to see if there's a 9 EMA. There we go. We got action now. We got some action. Okay. So, all right. So it's riding the 9 EMA. So, okay. So it can pull back. That's where it could pull back to, down to the 9 EMA on the 9-day EMA. As long as it holds that 9-day EMA on that pullback, then we still got action. That'll be the ideal place to get into. So if it loses 47.25, it has room down to this 9 EMA, which is at 46. Let's just call it 46.6 or something like that. It has room down there before a continuation, and it breaks through these daily price targets. You know what I mean? My daily price targets on here, I have 48.82 and I have 51.82, and then you get into this the gap fill area. So, you know, it may consolidate down here for a few days, but it has room to come down some more and retest this 9 EMA on the daily. But you see, we had to find it, man. And then look also right here on the daily. We see that the MACD line is the MACD is about to cross. It looked like it's trying to cross down to the signal line on that weekly, because one candle represents 1 week of price action. You don't really see, you can't get a clearer picture. So I needed to do some surgery on that weekly candle and see what was really going on under the hood. And I was able to get a better picture of where price could possibly go if, you know, when it starts to calm down. And again, long as it holds the 9 EMA, we still got action. But if it loses the 9 EMA, then, you know, it'll probably come down some more before earnings. But They got earnings on Thursdays. I love when a stock has earnings coming up in a few days because you can ride the volatility up and just play off of the this it's a sell the news. I mean, a sell the news situation. You play off the volatility and just the volume because they have earnings and people talking about it, and then you sell it before earnings. But also you just want to let the setup play out first and go from there. But yeah, this looks, I think Delta looks all right. Now go a step further. Here's the session hour, so where's that 9 EMA? Yeah, and we got confluence on where the 9 EMA is here, so I think that that's where it could possibly come down to if it comes down there, if it comes down there. We got to see how SPY open, because we'll see tonight we see how Japan opens tonight, because Janet Yellen, she's no longer in Beijing. She left yesterday, because today is Sunday here. Hold up, what's the day? The 9th, right? Yeah, so she left yesterday because they're a day ahead of us. Yeah, so she's gone. So good. So maybe let's see how if the market runs tonight at 8 p.m. when Japan opens, and then see how Hong Kong and Shanghai handle the situation too. We'll see if she said she think that they made progress. That's what she said. But yeah, so that's Delta. But I'm gonna switch back to the 200 for a second, because I got some chart setups that needed. And just so y'all know, like, I color code my EMAs. So I know, like, sometimes I'll have an EMA on and I shouldn't have it on. And the reason I know what EMA is because I keep my EMA certain colors. And so my 9 EMA is always blue, where my 200 is yellow and my 50 is green. So I know that they are my EMAs. All right, cool. So let's go over to, what's the first one that I want to hit real quick? Hold on. Like I said, we got some good ones. I'm gonna hit JP Morgan first. Was it JP Morgan first that I had that I want to hit? No, it wasn't. It was XLF. So look, so I named a lot of banks, right? So that can be overwhelming to play. So like I was telling y'all how we got SPY is an ETF that tracks the S&P 500, right? We got a ETF called XLF that tracks the financial sector. So it has the banks in there. So instead of trying to figure out all of those banks and play all of those banks, you can just play this ETF, this exchange traded fund, and take advantage of all of the movement without, and it also it's safer to play. It's safer. So obviously, just trading JP Morgan alone, you probably can make more money, because JP Morgan, let's say JP Morgan breaks out and runs like hell, right? And then you got Citibank that just moves sideways, or it may, you get, but a lot of times if JP Morgan beats earnings, and they all got earnings the same day, so it's kind of, it's a little different. But I'd rather play the ETF I'd say play the ETF. But look, I'm gonna tell y'all a few things about this. It's a good thing. It came down here, and this is a weekly chart. We're gonna get to the daily in a second. Came down here, it bounced off the bottom of this trend line on a week. Then we came and retested it again. So look, but it's at a area right here. It's at a zone where it kind of like the acts as support and resistance, a strong zone in this area right here. So we just got through this zone, and we bounced off the 200 EMA right here. So we kind of got back above that 200 EMA. We bounced off of it right here. And now we're just under the 50 EMA on the weekly, but we got back above the zone. And I wouldn't call this a hammer, and it's not a doji either, but it's something. But it's below the 50 EMA. We need to get back above this 50. Once it break above this 50 with strength, because we got back through this zone right here, then we can make a nice move up here. Now, this is a weekly chart, so it's going to take longer for this move to materialize, right? But if those banks beat, this is going to break out of this range, and it's gone. It's gone. But this is my price target on the weekly. My price target on the weekly for XLF, if we break above this 50 moving average here and hold above it, we're going to go up to 36.24. But now I'm going to go over to the daily so we can get a better price target. I mean, yeah, better open a quicker, easier price target, right? So look here, this is interesting. Look, so we're rejecting the 200 moving average on the daily too. But look, also on the daily, we're also rejecting, we got above this area right here for a second, right? And then it came back down, and it's almost like I would call this a bearish pin bar. That's not a hammer. But we rejected the 90 EMA. I'm sorry, I'm so used to playing the 90 EMA, the 200 moving average. Now, keep in mind, the 200 moving average is one of the most important moving averages if you're a stock trader or investor, because most stocks, where you want to buy stocks, are at their 200 moving average. That's where if you're buying stocks, once a stock is above. Now, this is the thing. This is a tricky one because the banks fell off a cliff right here back in March when that bank run happened, and it killed the whole bank sector. So they were holding strong above the 200 moving average, right? Then it lost it. They started getting strength again because they bailed the banks out, and they said, Janet Yellen said, they're not letting the banks fail. She said that, right? I mean, not trying to get into politics, but yeah, that's what she said. And so we got a little movement above here. It came back down. So we got to play with this area a little bit, but I'm more concerned with this line right here that I drew, because this is an area, a strong key area here. I think, but I love the fact that it correlates with the 200 moving average. Get above this 200 moving average. Now, another EMA that I use is the 50. And we got the 50 look like it's about to cross above the 200. That's called a golden cross, right? A golden cross is a bullish signal. If the 50 cross above the 200 moving average, oh yeah. So look, when the 50 cross below it, this is a death cross, and you see price died. But since moving averages are lagging indicators, look, by the time we had this 50 cross below the 200 moving average, this had already violently started selling off. And this is a weekly in the daily chart. It already violently started selling off. So even with MACD, this is just a confirmation. The only leading indicators, which are real time, that you have are price action and volume. So, but it's good to have this confirmation, but I already see it. I like to find stuff before it happens, right? And then you get that confirmation when you get, so I'm just looking for price action to make a move. But I do feel like with this upcoming week that we have, if the banks do well, then we can get a nice move. Now, JP Morgan had a great earnings last quarter, and Goldman Sachs not so much because of the what was it? It was an issue with the I can't think of it right now. It was something they had going on with it's gonna come to me, but just not at the second. But yeah, I think it's a nice setup right here, man. We're just waiting for price to get through this area here. So normally I would be like, if we can break above, one sec. And I'm gonna look at the session hour just for the hell of it in a second, but this is XLF. But the crazy thing is, if we do break above this particular level, it takes us above both of those. It takes us above the that key level, and it takes us above the 200 moving average. So that's just something to just keep in mind. But I like this as a swing, because keep this in mind. If price moves above this green line right here, right? So this is a daily chart. We get price above this green line, and it holds above this green line. But if we can get halfway, we can get to 34.30 or something like that, we can easily go all the way up here to 34.82, and then it's gonna go hunting for this gap fill area. And then by that time, we should have that 50 EMA crossing above the 200 moving average. So let's see how this week goes, man. But this is the one to play around earnings season. Now, I'm gonna tell y'all, sometimes it can go horribly wrong. So you have to have parameters in place. And the parameters in place for a trade like this would be, for me, is okay, if it loses the 200 moving average again, or just lose this zone, you got to cut the trade. So you set a limit order, you set a stop loss, sorry. set a stop loss to sell it if it loses this level again. Now, this is a daily chart. So if I'm only basing everything that I'm doing off of this chart right here, then what that means is I'm trading, I may be swing trading, you know, because if I'm only looking at the daily chart, then I'm swing trading, right? But I'm using it as a reference point. I'm using it as a reference point if I'm intraday trading it, because a lot of times I want to intraday trade, meaning I'm intraday trading and I'm day trading. I'm not swing trading. So hold on, I just want to look at the session hour on here. Yeah, it's choppy, but it's in a range too. So it's been chopping in this range here. But yeah, man. So this is a good setup. And again, when I get to the JP Morgan charts and get to the Goldman Sachs chart and the Wells Fargo chart, you'll see what I'm saying. So you don't have to play XLF. You can play one of the other stocks, Let me get that off of here. I'm gonna put the weekly over here and keep the. I got a good one. Yeah, this is an interesting. I like JP Morgan, man. This one looks so good. So look here, look, this is a daily on JP Morgan. We got action. That's what I'm gonna say. We got some action on here, but wait till I get to the weekly. That one looks even better. And so we holding above the 50 here nicely on the chart now. And we got a 222 reversal. Is that a 222 reversal? I see. Yeah, we got a 222 reversal right here. And so a move above the 145.84. We should be able to close that gap and break out of this wedge right here. Now, look, this is the thing. We do that, we got some big moves. We break out of that wedge. That's like a $6 move to 153.30, right? But let's go to the weekly for a second over here. The weekly already broke out of a wedge. We got a candle confirmation. Then we got a retest. Look, this was the solid part right here. We got a retest of the wedge break. Price came all the way down here, found this way resilient. It was very resilient, price was, and closed above the wedge break with a hammer, right? So we got that, and it's in that gap fill area, right? So it looked like it wants to have a continuation. It looked like it wants a continuation. So you can't just get all of the noise that's happening. Now, we don't know what's going to happen for JP Morgan's earnings. And hopefully the market is solid, because we had a sell-off last week. So we're going to get to a few other stocks, but the market kind of pulled back a little bit. And I showed you how SPY finished on the weekly. So just a little iffy there, I'm going to show you how the daily on SPY, because we didn't look at that. But I like the way JP Morgan looks, and they got earnings on Friday. So and the great thing about them having earnings on Friday, that gives us 4 days to trade it, possibly, right? So I'm just saying 4 days possibly to trade it. Now, I may not trade JP Morgan at all this week. It's just a trade idea. But if it's one of the stocks that break out, then it may get traded. It may get traded, because, like, again, this is banks kickoff earnings season, and then we got the airplane stocks, and then we got the, like the CCLs, and we got all of those stocks. We go to, yeah, so pretty much what I was saying for JP Morgan, over 148, 153. But I'm gonna post the levels in the chart alerts channel today. So y'all have the levels with the prices and stuff like that. And then below, let me go to that, show y'all that real quick too. So, and because I ain't hit the what if other side too, because I see this red line right here. So we lose that 140. What is that one? That's on the daily. That's on the daily though. But I got a weekly price. I got a weekly level for this too. I like the weekly levels, honestly. That 141, we lose that 141, and we go fill that gap down to that one. I'm sorry, we go down to 137.69. That's what I'm looking at on the weekly for JP Morgan. So that's more like if we get, so let's see how price moves this week. And I said, like, with it just looks that price is still holding strong, man. And I like the way it's been moving. I really like the strength in it, and it's just had a lot of stamina on MACD, just look at MACD on the daily, sorry, hold on. Weekly, I'm talking about on the weekly, just like looks good, man. So keep that on watch, man. Keep JP Morgan on watch. Goldman Sachs. And we've been crushing Goldman Sachs. The reason this one is important is because remember a few weeks ago when I put the team in that Goldman Sachs play, because it was at the bottom of this range right here on the weekly, right? And it ran like several, I know Strat Ops was in that trade. He made, I don't know how much money he made off that trade, but it was a solid trade, right? And it's testing those levels again right now, heading into earnings season. Now, they don't have earnings this week. They got earnings next week, but they're going to run, you know, in sympathy with JP Morgan and you know, Morgan Stanley and all of them. But look, this is the weekly and this is the daily. We got time frame, excuse me. Let me bring the daily up. The weekly and the daily, we got time frame continuity on this trade. So it's likely to bounce. Now, I was talking to someone at the summit yesterday about just the probability. Someone, and this is a good thing. So they were showing me they trade options, but they only trade options by looking at the options contracts and going off the probability based off of the percentages on the options contract. So like if you look at an options contract, it'll say the probability of the success rate on this trade, and they would buy trades based off of that. And I was telling them, I'm like, that's not good. You should buy your trades based off of where it is on the chart. And like, for example, let's say he had a put trade that said the probability of the trade was high. We don't know all of the factors of why the probability of that trade is listed high, in that it could be an open interest thing, it could be a volume thing, it could be a lot of things, number of things that went into why the probability of that trade was listed as high, right? But I'm looking at it like this. I'm like, well, man, I'm getting calls because the probability of it bouncing here are much higher than the chances of it having a continuation to die. Now, obviously, you wait for a confirmation first. You don't just say, well, it's down here, I'm going to do this. But we got, especially going into earnings season, right, with the banks reporting this week. But I feel like if the market gives us, they flushed us out a little bit, they shook out a lot of the people that were a little too bullish, and now we just ready to kind of have a continuation, man. That's what I'm looking for. So, but yeah, this is where we got in here before. And if you just look at this trend, each time that it's retested this, now this is a weekly chart. So on the weekly chart, since July of 2022, a full year ago now, I want to keep in mind, I want y'all to know something. On June of 2022 was one of the worst times that we've seen in the stock market. We made thousands and thousands and thousands of dollars on this move down. I know everybody remember this. With CPI, we had CPI, we had FOMC, all of that was in this right here in this June. But look, it still held these levels. It didn't come all the way down here and lose this level. So and he had another one where we died again, in September. Every time it's come down here, even with the bank run stuff that happened in March, came down here, tested the bottom of this range. So in my opinion, I'm like, well, man, if I die on this trade because I was going off of back testing and the probabilities of it losing, we've had some crazy economic situations that occurred, and Goldman Sachs held this level just like it did a few weeks ago, right? And so now it's here again. So what are you going to do? The worst thing could happen. The worst that could happen is the trade falls apart and you have a stop loss right here and you sell the trade. But what I would do is, this is what I'm going to do. I'm going to give y'all a little tip. This is what I would do. Me personally, just to add some margin to this real quick. So nobody's make this line a little bigger. What I would do is wait for us to get above this line right here. We get above this line, make it a little darker. Shit, hold on. And you can see it better on the weekly. That's why I came over here than the daily. because and I'll make sure I got it on the chart. But I mean, if you're looking for a quick trade, just to trade, and you don't have the patience, that's something different now. That's too dark. Sorry. But yeah, I like this zone right here. I like the zone here. And so when it gets over here, because think about it, if it gets over this zone right here, you can wait for it to get there. You might miss a few $100s, but if you get that solid close of, if you get like a break above here, this area right here, the potential for a move higher is crazy. You know, it's crazy. So that's when I'm gonna call it out to my team. But you know, like if you're a super sniper and you know the vibes, you know what I mean, you already know what to do, right? But I gave y'all the probabilities of the move and how strong that line was. Like I said, look at this as ice, man. Talking about how strong that ice is, man. You know, I'm trying to walk on that ice if you don't know it's strong, but this ice been holding since July, since I'll say June 2022. And I know that the worst we've seen the market, the worst sell-offs we've seen. And just like I said, the worst sell-off we've seen for this sector was this year, you know, in a while. And it's been holding. So since we got that flush out down here, and it was in June, right? It's been holding up. It's been holding up. But I said July because this was the lowest point. And so, yeah, so that's it. If you didn't get anything out of that, man, keep an eye on Goldman Sachs and then buy. Because look, all right, so this is a key point right here, key point. So somebody may say, well, he said that Goldman Sachs, it bounces off this level and this would be a good place to buy. Now, if you're trading options, this is a weekly chart. Now, like I said, it's doing the same thing on the daily, right? But how long do you think it's going to take for price to get where you want it to go? Like, how long are you planning to hold that move? Like, is it going to happen in a few days? Like, is that something, this is a move that you want to be in for earnings? Is this something, like I said, this is just a trade that now the trade that I told the team about 2 weeks ago, that played out in 2 days, but we had a catalyst coming up too. They were doing a bank stress test, right? But and then right after after that situation, and that was a nice move though. It was a nice move, but it was a nice move. It was, what is that, like a $26 move, $29? Yeah, like it was a big move, big move. So just look at this, man, and yep, there's one that I wanted to point out. Wells Fargo. I love trading Wells Fargo's options, man. They cheap, but this is a stock that runs a lot, man. It runs a lot around earnings time if the sector is doing well. Now, this was another situation that I really like because look, price got back above the 200 moving average, the 200 EMA on the daily, right? A strong surge candle right here, which is an institutional candle. We got that close above the 200 EMA right here. Then we got a wedge break, gapped up, came back down, retested the breakout. Hold on, let me make this larger. Came back, retested the breakout, got a nice move up here, rejected this small gap fill right here. It ain't really but really about nothing, right? Then we came down here, we retested the wedge break again. I love when we retest the wedge break. It let us know that breakout is really solidified, right? And then we finished as a candle, came back down, retested it again, finished as an inverse hammer, but at the same time, we holding the 200 moving average, and we're still holding a wedge break. That's bullish, man. So still bullish. Now here's the weekly. Weekly, we broke above the 200, but look, we're rejecting that. We broke above the 50, but we're rejecting the 200 on the weekly. So let's just see how this plays out, because again, getting above this weekly, getting above the 200 on the weekly, man, I really think that if we get above the 200 on a weekly with some energy, I mean, with like some volume, man, this thing gonna break out of here. So it's gonna run all the way up to like 47. We break out of here, that thing is gone, because look how oversold it is anyway. It's been oversold for a while. And when I say oversold, I mean, because it sold off a lot, came back down, it ran up, but then it came back down, right? So it's not really oversold, but it's been, let me look at the monthly chart for a second. It's oversold. it's oversold. And so, but you see this trend right here that's forming on the monthly, this bull flag on a monthly, this massive bull flag setting up on a monthly. I didn't see this before today. I just looked at it just now while I'm on here with your massive bull flag on the monthly, right? So it's knocking on the door. So that correlates with what the price action and everything that we were looking at on them lower time frames. So that's even more time frame continuity. So we break out of this monthly. Now keep in mind, so remember we were talking about, because I know I don't want to confuse nobody. I'm just going to say this, unless you're buying stocks, I wouldn't really be using this monthly chart. I'm looking at it. The month just started. I wanted to see, I needed a clearer picture. I needed more confluence just to see what I was seeing, right? And I had enough of it, but I wanted to look at the monthly chart and I saw a bull flag. I like bull flags, number one. Number two, if we break out of this flag on the monthly, now it doesn't really mean anything. We can break out of here on the monthly and get a head fake because the monthly candle, it takes a whole month for it to close. So it can break out and make a move, but that candle doesn't close for like 30 days or like 20 days, right? And but the point I'm trying to make is when it breaks out on the monthly, other people are going to start paying attention to it. People who buying leaps, buying options that they're holding for 3 years, people who buying options that they're holding for 6 months, people who buying stocks, they're going to start looking at this. You're going to see a lot of dark pool activity going on. You're going to see all types of stuff happening when this breaks out of this monthly bull flag. So it's going to be more larger market participants that don't trade those baby time frames that we talking about. So just keep that in mind. When you get those, you wake up those larger time frames, and you get action. So yeah, that's just something to keep on watch too. Yeah. 1 sec. Keep doing that. Now, which I got Citibank, because they got earnings on Friday too. That's another one that be moving. Citibank contracts, they cheap too, but just because contracts are cheap, that doesn't mean that you should use. That doesn't mean anything. I'm just making a note that they are cheap. It finished inside on Friday. So on the daily, it finished inside. So we got a neutralizing candle on this one. So it can go either way, right? It rejected the 50 EMA on Friday. Well, it's been rejecting the 50 for a while. So since it lost the 50 on my B-Day, it's been under here, right? And and this is an example of a head fake right here, right? It broke back above the 50 on Monday the 3rd. Yeah, hold on. Yeah, Monday. Hold on, my bad. Yeah, so Monday the 3rd. Yeah, it broke back above the 50, but you see it closed back below the 50. This is a daily chart. So one candle represents 1 day of price action. Same thing happened on Wednesday, broke out of there, and it came back down here, closed under that breakout area. So, out of the back below the 50. So it's been rejecting that. They try to make a move, but it gapped down here. And this time, so we got this closed down here, and it opened here, ran up here, but it closed inside. So it couldn't take out the top or bottom of that previous candle. So it's inside. So we got price inside of this range right here. So if we can get a move, see, my thing is this, it's easy to say, okay, well, if we get a move above this 46.38, you can trade it, but I wouldn't trade it. I wouldn't trade it. I would wait until it get above the 50 to trade it. If it can't get above that 50, it's probably going to get rejected anyway. So I would trade it when it get above the 50. So wait until it get above that 50 moving average, 50 EMA here. And so that let's give it some margin and call that like 46.80. Let's just call it 46.80 or something like that. Because if it get above there, then it has some room. Now, because again, think about it. These contracts are cheap on Citibank anyway. If it get above here, I really would love it to get up here, but a $1 move, up here, those contracts will print, right? But I really want to move above here, this key area right here, key area of support resistance. It get through here, then this is like my guy Kevin, who was on here earlier. Kevin, he likes to scalp and everything. So you're looking for a smaller trade. Now you can find that trade on a lower time frame too. But saying if you're looking for a day trade or something like that, I just say I wouldn't touch it until they get above this 50 because it's having a hard time above it. Now you see those head fakes happen. And so again, this is a daily chart. So what you want to do is you want to look for a setup on a lower time frame if you are trading it. But they got earnings this Friday. So Citibank is one of them ones, man. It runs a lot. It runs a lot. Now this is the weekly chart. On the weekly, we have a set of 3 on the weekly. But it's still a bearish candle, and it's right. It's holding the zone down here, like I was showing you. It's just below the zone here. But yeah, we just gotta obviously there's no setup. It's a setup on this trade, but it's not in force right now. We're waiting for a setup to happen on this trade. The ideal trader, man, you're waiting for a breakout. I don't have a full setup on this trade right now, on this particular chart right now, but they got earnings, so a setup will happen soon. And when one happens, we will trade it. But like I said, if you're looking to trade calls on it just to be trading, wait for it to get above this 50 EMA, and then you can get a nice move out of it possibly. I just think that the fact that it's been struggling, if it can get above it from here, then you may have action, but it may come down. But my thing is this, I'm looking at this range too. I don't like this trade. Now, the more we unpack it, I don't like this trade because and I mean, just like as a regular day trade for now, because look at this. Since March, it's been holding this uptrend. And so if it loses this range right here to activate puts, it's likely to bounce right here. That's not enough. So we talk about risk to reward ratio. I'm like, it's not worth it for me to get into this trade, and the reward is likely to just be this line right here. It's not enough reward for me to even take that trade. So I ignore this trade. The only way I would trade this trade, to be honest, if price came down here and bounced, because at least I know I got room up all the way back up here, at least to this zone right here. But the ideal trade would obviously be for it to break out of this range. That's what we really want. We want it out of this whole wedge. I just wanted to break down. I wanted to break down everything that was encapsulated in this particular chart, because there's so many ways to look at it and there's so many ways to interpret it. But we had solid setups on the JP Morgan and the Goldman Sachs trades, and even the Wells Fargo trade, but not this one. This one ain't ready yet. But when Citibank get ready, it's going to go. Now, look at this chart also. Because think about it, some people can't wait, and it's about patience. And I always tell my traders, whoever you are as a person, is who is going to come out. It's going to seep out in your trading. There's no way you can get around that. So if you don't have patience in real life, you're not going to, or discipline, you're not going to have it in trading. You're going to be anxious. You're going to be like, man, it's moving. I want to get in it. And then you get clapped. So if you want to make more money, wait for the breakout to happen, because when this breaks out, the possibilities are endless when it breaks out of a range, right? And you get more action on it. And it's been coiling in here for a little while on the weekly and the daily. So just something to keep in mind. Now, the last few I have, I gotta hit Meta. The rest of them I probably won't hit. I'm just gonna post them in the chart alerts channel. But I gotta hit Meta, because Meta is actually, I think Meta is due for a pullback, to be honest. But Meta bounced off of a key level, and I think it was enough to get a move out of it on Monday morning. But I think Meta going to try. I think at some point Meta going to lose that 288, because we're heading into earnings season. It needs to cool down a little bit. It's been running too long, so it needs to cool down, in my opinion. So I just think that as long as it's been holding, and it looked like it wants to make another move, right? Just a quick move on Monday morning. That's all I'm looking for, to be honest, on Meta right now. But I think that Meta could give us a nice move on, we can get a nice move out of either side from Meta. But give me one sec. And you see it's been in one of this rising wedges, potato wedges, for a while. And this is the daily, and we got it's a weekly right here. So we got the 50 about to cross above the 200 moving average on here, 200 EMA on the weekly, right? But you know, and that's cool. Meta has been oversold for a while. Meta wants 300. It wants over 300, right? And so, but we got to just be realistic. It needs to cool off. It's a little exhausted because remember on Friday, even when the market started to break out finally, then Meta just was like, they just had enough. It cooled down. But one thing that we did see today was that the highest call volume, the second one, I think it was the second highest call volume on Friday was Meta calls. So somebody saw something. But yeah, like I said, I just felt like we pulled back to an area that I like. Let me go to the session hour real quick. That's where we were looking. Meta is this bull flag that played out on Friday and then it broke back down, right? And so this was that entry. We talked about this last week, but this was what I was saying. I wanted Meta to pull back down to this around this area here. That would be the ideal entry. And that's exactly what it did. And then it took off on Friday. So and that was a nice trade. So yeah, now it came back down and retested this area. So I'm just looking for a move back up. And you know, not even necessarily I'm looking for a nice move back up, but I'm not looking for it to I feel like it's a little exhausted. So yeah, let's see what the market does. But I just wanted to point that out. Meta got earnings at the end of this month. So we'll see. I mean, Threads are doing well. I mean, anybody using Threads? I mean, I love Threads, man. I think I spend most of my time. I've been on IG, but I haven't like really been on IG since they started Threads. So I like Threads, man. I think it's cool. And yeah, I think I said that was it. I think I had yeah, so like just as honorable mentions, man. Obviously, I did want to show y'all the daily chart on SPY. It's real chopped up, man. The chart is so actually we got some no, I thought that was the weekly, it's the daily. We did look at this already. My bad. We did look at this because we looked at it with Kevin, but it's just it's just not enforced. It's a inverse hammer almost, but it's not enforced. Yeah, I got to clean this chart up anyway. So it's been chopping in this range. You see this double top. I pointed this out when it happened, when we first got this double top up here, and it still tried to run, but double top is because we got this M shape right here. So it's likely to try to, you know, it already closed that gap. Then it, you know, did a few other things, but it's possible, you know, price could still, it could do what it wants to do, right? But double top, it looked like a double top trying to play out right here on SPY. So let's just see how what the market does. Again, we had a good quarter and now, so let's just see how the market plays out, but we'll get an indication in about 4 hours with the Asian futures market and go from there. And that's all I have, man. I'm sorry to keep y'all, man. This meeting was supposed to be for just an hour and we kept y'all for 2 hours. So cool. All right. Well, I appreciate y'all hopping on and I will see y'all later. And if y'all got any questions, just post them in the chat in the brainstorming chat on the in the Discord and I'll get back to y'all. And anybody else, man, again, thank y'all for hopping on and there's a link in this chat on the meeting if you want to just get access to our charts and stuff like that. And I'll see y'all later. Peace.
All right, bro. Appreciate your time as always. Congratulations.
Definitely,
again.
thank you.
Thank you.
No problem. Thank y'all.
Take care, man.
No
Take
problem.
care.
I almost had it.